Yeah, hello, good day, guys. My name is Nick, and welcome to the final chapter 4 of our trading advantage, taking advantage of your trades with the gold mega leverage. So we have been on the series from chapter 1 down to chapter 2, chapter 3, and now we are in the finale, which is chapter 4. And after this, we'll be having frequently asked questions that we have been receiving so far, and we'll be attending to every one of these questions. But before that, we'll be speaking purposefully on the benefits of gold trading, which is very important. And then we talk about drawdowns that usually happen, drawbacks of trading gold, before we then finally move to the frequently asked questions on gold trading. So far, we have been getting lots and lots of testimonies from clients who have been taking this process very seriously. And they have been, of course, they have been applying it to their trades and being able to make consistent profits from all the strategies we have been mentioning. And today we'll be sharing some of the questions that has come in and how we have tackled them for some of the clients who have asked some of these questions. Now, we are, of course, we'll first start with our benefits of trading gold. And, of course, we'll make mention of how to take advantage of these trades using the gold mega leverage. So with all that being said and done, let's move on to the next page. So the benefits of XAU as a trading gold as a dependable or reliable asset in volatile markets. We see that gold is often seen as a safe haven asset. It tends to retain its value during economic instability, or let's say geographical tensions, and its price usually, makes markets face uncertainty, and that is why many traders have it as an attractive option. But it is very important to note that this instrument is not entirely immune to short-term price movements because it, of course, declines the prices, subtle price movements, and due to the issues of basic liquidity processes. And it's very ideal that we understand it this way. Gold comes with lots and lots of benefits, and one of which is being very dependable or a reliable asset when it comes to volatile markets. So this is one major important thing about gold trading, while we have more other things to mention as benefits of trading gold. Next page, please. To the next page, please. Now, we see that including gold in your portfolio can, of course, help you reduce overall risk because gold commonly moves in the opposite direction of stocks and other assets. And this makes it a very useful hedge during market drawdowns and downturns because it, of course, has similar characteristics because it makes it a useful hedge during market downturns. And when we talk about market downturns, we talk about trend involvement, trend reductions, downtrends, which are particularly some of the hassles we face whenever we place a trade on a buy trend, and it goes whipsawed or it goes the other way, which is the downtrend. And we keep asking, why does it keep doing this? So it's all because of the diversification of traders who are currently in that market at that point in time. So this makes it a very useful hedge of during market downturns, because many markets are very, very purposeful and very, very opportunistic in nature, because it always presents lots and lots of opportunities for us to jump in, grab some money, come out, and make good profits for the meantime. So I will purposefully say that We are understanding this diversification, and many market speculators rely on it to balance their portfolios. So it's very unique. It's very unique that their behavior strengthens trading diversification strategies and a lot more things. So it's very unique that we understand these things in this very way or in this very form. All right, next page, please. So gold has high trading volume, which we can also call high liquidity, and it has the opportunity to give quick profits when you enter into them because they are very volatile in nature. It's not a new thing. And a lot of traders trade the gold pair due to the fact that it is so volatile. Now, the pair experiences huge daily trade flows, and the high volume also then allows it for quick transactions with minimal price fluctuations, as well as what we call variations or large spreads, as the case may be. So these are the things that make the gold pair point out, and people are very, very particularly about trading gold, and because of its fluctuations and opportunistic nature, as well as the variations that come along with it. So it creates opportunities for short-term traders, and let's say it creates more profitability for long-term traders. So gold has high trading volume, high liquidity, which makes it a standout pair for most people. Next page, please. Now, it can be used as a shield or protection against the dollar decline. So if you are a trader that anticipates that the value of the dollar will weaken, you can say, or you can buy gold with the expectation that its price will definitely rise because it's always on the upside most times. And it can save you from some risks which are associated with devaluation. So it's the ideal we understand the concept of these things and understand that the value of the dollar will weaken when we buy gold with the expectation that its price will rise. So it can save you from risk associated with devaluation. Next page, please. Now, we talk about drawbacks of trading gold. Number one, they are unpredictable price swings because high volatility fluctuations, which usually offer profit opportunities to traders, can also lead to serious losses. You know, you must work with a solid risk management system to protect your funds. So we have these unpredictable price swings, high volatility fluctuations that offer profit opportunities to traders and can also lead to serious losses. So you must work with a solid risk management system in order to protect your funds at all times. And when we talk about solid risk management, it means having up to par fund enough funds for all these things to happen. Next page, please. Its prices are dependent on the US dollar because gold prices are linked to the dollar strength. You know, a bullish dollar may drive gold prices a bit low, you know, but this situation can in turn reduce profit prospects for intended market participants who ignore this relationship between prices of the dependence of the US dollar and the gold currency pairs. So gold prices are heavily linked to the strength of the dollar, and a bullish dollar will always drive the gold prices lower. So it's best we have these things in perfect understanding. Next page. Now, leverage can cause huge losses because using leverage in gold price speculation can also magnify the losses. So we will say, more or less say that a small price change in the wrong direction can result in heartbreaking losses. So we are using leverage in gold price speculation can also magnify losses. And we have the fact that fundamental analysis can be a bit challenging because when you're examining gold, it requires grasping many factors like the global economic indicators, central bank decisions, and geopolitical events, which are very, very vital and ideal for people who are ready to join in the making of good trades when it comes to trading gold. And this fundamental analysis can be a bit challenging in some other ways, like not understanding what really drives gold, what economy drives gold. But I just want to put it out to most people who had missed some things from the onset. We always look at the Aussie. The Aussie are one of the major users of gold, and also the Chinese sector. So these are people who patronize gold, and they are the actual ones who move the gold market. So if you are into gold trading, you should pay attention to news events that come out from the Australian dollars, the Chinese yen, and I think some part of the New Zealand dollars as well. So they are the major stakeholders or stakers of gold. They are the ones or the reason why the gold markets are always plummeting or coming down, as the case may be. Next page, please. Now, examining gold requires grasping many factors like global economic indicators, central bank decisions, and geopolitical events. Gold's price is also influenced by supply and demand trends in the commodity market. And of course, the complexity of these elements can make fundamental analysis quite difficult for some traders to be able to analyze where the market is actually heading to. So it's ideal and important that we understand what gold price is being influenced by supply and demand trends in the commodity market, and try as much as possible to examine the gold pair based on central bank decisions and geopolitical decisions. Next page, please. Now, here are some frequently asked questions like, is gold good for beginners? Now, very importantly, we understand that trading gold can be good for beginners, but it is worthy to know that it comes with high volatility and requires proper risk management. You should start with a funded free trial account or very low leverage to be able to reduce risk. We have things like, is trading gold profitable? Yes, it can be profitable, but profitability depends on your own strategy, your market knowledge, and risk management plan. So it's very important for you to understand that gold is good for beginners, and also trading gold is very profitable for risk management traders, funded account traders, and of course, bulk account traders, funded free trial accounts or very low leverage to reduce risk. So trading XAUSD is very profitable. And of course, it is good for beginners. So these things are most of the frequently asked questions that we have been receiving. And there's the answer to most of these things. All right. Next page, please. Now, how to trade gold successfully was recently asked. And I was able to point out 4 easy steps that must be met for you to be at least sure of trading gold successfully. So 1, you learn what drives its prices, which is fundamentals. News events from these countries, Australia, New Zealand, some parts of China, and also the United States dollars, of course. Then number 2, you use technical and fundamental analysis. They work hand in hand. All right. Right after you have gotten economic news events, which is fundamental analysis, you then move to technicals, which is purely based on what is happening on the charts. And the third, of course, you set your stop loss orders and avoid too much leverage. You avoid too much leverage. And the fourth one is you monitor the US dollar, gold, because most of the time moves in the opposite direction to the dollar. You more or less you study their relationships and understand what actually happens with these currency pairs. All right, next page, please. Now, what is the best time to trade gold? Generally, if I can pick up the gold chart at any time, but I mostly pay attention to it when it's less volatile. and when it is more, it has a lot of direction and not directionless. Because if you choose to trade gold when the news events are coming up, I mean, due to its volatility, you might just get whipsawed or you might get taken out easily, no matter how much you have in your account, right? And also depending on the lot size. So I just coined this out that the best time to trade gold is when trading engagement is high, like during a key trading session overlap. Overlap means when two trading sessions coming together. Maybe you have the Asian session going out and the European session coming in. That's more like an overlap. And or maybe you have the US section coming in, and as well as the European session having started at some point. So that's more like when you're having an overlap. So these are the best times to take your trading, your gold trading quite seriously. And at this time, I think it's really, really profitable when you have these overlaps happening. You get easy profitability. You find it easy to get profits from this. All right. Next page, please. So that's it. And that's a wrap for our Gold Mega Leverage series. We have really taken time to break this down to you guys. So keep signing up and keep claiming your 500 times leverage. Take advantage of these courses. Make sure you understand how each and every one of them works, how to maximize your profit potentials using each and every one of these lectures. They're very important. Don't take them for granted. They would help you very much to be able to have your stability and understanding of how the gold market moves, how to consider your entries, when to take your profits, when to cut out your losses quick so that you don't have your account whipsawed or taken out. So it's ideal we understand these things this way. And I really want to thank everyone who has been with us from the chapter 1 down to chapter 4 for joining. And all right, see you guys again in a new series of our webinar next week. Thank you.